Plattsmouth is our marketing analyst this week. We spoke with Roy Wednesday afternoon and began by asking how the looming reports on quarterly grain stocks and prospective plantings affect seasonal price trends.
Normally this time of the year we're looking at an uptrend in corn and soybean prices both, and so far that's been the case up until the last 2 or 3 days. I guess the issue this time is number one, the tightness of the corn supply here in Nebraska and other places where there's a lot of demand for corn. And the other issue is the South American harvest of soybeans and how soon they're going to make it into the U.S. market. So, we've got a couple of big unknowns here to deal with, notwithstanding the fact that most years we're seeing the market in an uptrend this time of year.
Well, what's your mindset with corn? I'll get to soybeans in a second, but corn found a little help after last Friday's report. However, there's some fear going into that quarterly stocks report that things might not end on the right way if you do end up holding your corn. Well,
the last report we had was friendly to corn, and we saw the result of that here in the last couple of weeks. And I guess it's kind of a cat and mouse game as to what you want to believe and what you feel about the corn market. I mean, here in eastern Nebraska in Cass County, there's very little corn left in the bins. Most people took their corn to the elevated harvest time because the crop was short and it was dry and so forth. And so, that's reflected in a dynamite basis. I mean, the basis of here at the Midwest Co-op of 17 over nearby futures. Now, I think the question then you have to ask is this true nationwide? And if it is, when is the market going to recognize that and continue the rally?
So you're not going to jump on either side of the fence right now for me?
Well, I'm looking for a rally to sell into, and we were getting awfully close. We got close to 750 cash here about a week ago, and so I still have optimism that we'll be able to do that, or maybe a little better. I don't know if we can get back to $8 or not, but somewhere in that 750 to 8 range would probably start moving some corn out of the bins, what little bit is left.
I'll ask you about beans here, and my question is this: if you go back to last fall, and there were a lot of analysts that thought spring was going to be the high before the South American crop came in, and that South American crop is now well under harvest, and the reports are that it's quite good. So, if you're bullish in beans, what are you arguing on? Are you arguing that there's going to be a lot of demand for it, or you're arguing that there's going to be weather concerns here?
Well, first of all, I think you have to recognize that the basis is good on beans also, which indicates demand. And so if we're playing a game of chicken with this soybean market. We know that the supply from last year was very tight. We know that the South American crop is coming. We're not sure how big that is, but we also have the unknown of the U.S. production environment. Are we going to have enough rain to give us a chance for a good crop, or are we going to go from shower to shower and maybe not have a good crop? And so we've got a lot of things in the mix there. And most of my beans were sold last fall on the dead cat bounce. That's a practice that I always use. I've got about 10% left to gamble with, and right now I'd say it really is a gamble. You're almost flipping a three-face coin to see which one of those scenarios you're going to follow.
Is there anything that you're looking for, or any kind of run you're looking for?
I would look cash somewhere in the $15 to $16 area as a time that might encourage me to quit gambling and cash in on the rest of them. But everybody's got their own level. Everybody's got their own profit potential, and so I think if you're holding very much grain, either corn or beans, you need to look at today's price and what it does to your cash flow, and can you afford to put that at risk. That's really the issue. And with only 10% of the crop, my answer is yes, I can do that. But if I had 50 or 60 or 80%, I'd say let's get some of those moved on any kind of rally here.
Give me some quick thoughts on 2013, either corn or soybeans, if you think there's an opportunity to forward price.
If you're selling a new crop, corn or soybeans, number one, you're betting that the price is going to be lower at harvest time. So looking at the price level. If you sell now, you're selling into a discount both on basis and futures price. So you need to first of all look at what your potential for raising a crop is, and if you can make money with that discount, why then some sales might be warranted. Personally, I'm considering the moisture conditions here in the dryland part of the state and the amount of discount and amount of risk there is, I'm not willing to make any sales right now. But if you are going to make sales, one thing you for sure want to do, and that is leave the basis open, because there's a tremendous discount in the basis looking at new crop 2013 beans, and so selling hedge to arrive contract or selling on the futures market makes a lot more sense than a cash forward contract.